I'm Malcolm Graham Wood, and today I'm doing my CEO interview on core finance. And my guest today is George Lucan, CEO of Angus Energy. George, welcome back. It's good to see you again.
Morning, Malcolm. Good to see you too.
Excellent. Now, we've spoken fairly recently, but there's a lot going on about the business. So rather than explain everything you do, because I'm sure one way or the other we'll cover everything in the next few minutes, why don't you tell me about the transition that you've been implementing at Angus in the last few months?
Well, we look at transition as a real opportunity for shareholders to make good returns, good money. And we've focused on an immediate area where we've already got great skills as a company, which is drilling and going straight into geothermal. And we believe actually geothermal projects needn't be as expensive as you see around the world. Some of the projects are, despite the great depth we're looking at drilling to. Because we're looking at 5 kilometers down at hot rocks, where you're getting superheated fluid, 200 degrees plus, and you can do what's called flash generation of power. But that's only one aspect of the whole world of geothermal. So it's a tremendous opportunity for us to bring two things, I think: drilling skills and low-cost Angus.
Good. Well, I'll come back to the geothermal in a bit, if I may. So keep going with the
transition. Well, I think other aspects of transition are simply executing existing hydrocarbon projects, but in the cleanest fashion. We're looking at installing some power gen from some relatively shallow geothermal wells at Salt Fleetby. We've done hydrogen pipe, the first commercial use of hydrogen-ready pipe in the UK. That's pioneering stuff. We have some heat to energy work down on the southern fields. So, and we've actually explored a waste to energy solution for one of our plants. Part of this, Malcolm, is about stewardship of the existing oil sites. So we look beyond. We're not leaving oil and gas. We're going to make money out of them, because transition is a noun of motion, as you know. And to get from A to B, you need to be able to walk. Now, if we can't realize existing assets profitably, we're never going to be able to fund transition. We're always going to be going back, knocking on the door, cap in hand. So transition for us is an honest exploitation of existing resources, good stewardship, always looking beyond the end of life of those sites. What else can we do with them? Storage, hydrogen, solar, doesn't matter, agnostic. But the immediate prospect for us as a company, our skills base, is clearly drilling. And geothermal for us is also not just coming into its time in Europe, it clearly is doing that. You're seeing projects every day, every week in Germany, in Austria, in France. And we saw United Downs in Cornwall, a successful project at a similar depth, similar rocks and formation. It's great news for us because it de-risks our own efforts. So that sort of encapsulates where we're trying to go, which is feed into a mix of geothermal, relatively clean gas, and still working out our legacy oil assets. And I do think oil, let's be frank, has a finite life as a major league commodity, but that ain't going to happen soon. We're still going to be using it for a while, and you don't just say, oh well, it'll all get dug out in Saudi and we can forget about it. It's nasty, dirty stuff. Let the foreigners do it. We have a domestic industry. It's a skills base. It employs, and we have a need. So as and until it vanishes, we're going to stick with that. So if that gives you a nice sense of where we are. We're honest about it.
Excellent. Yeah, well, it certainly does, and that's a good roundup as well. Well, maybe if I may come back to 1 or 2 of those points. Let's talk about Salt Fleetby to begin with, because it's been the centre of attention in the last year. I'd like to divide it into 2, if I could. First of all, maybe financial to begin with, where we can run through the loan terms and the RNS put out recently, and I'll talk about operational success on the facility after that. But talk us through the loan situation, if you would, George.
Well, we really are deep in documentation, in detailed documentation, exchanging, I won't say final drafts, but very complete drafts of an extensive range of agreements. I'd say the thing that slows us down nowadays is items of property and getting security over property and the right charges and assignments. It's a lot of work there.
Yeah.
In terms of commitments, as we said, we had soft commitments from Aleph Commodities from their range of providers of 11 million, which is great. It almost covers the facility. And then in the last 6 weeks, we had another house come in, a very significant multinational company, and they were offering 8.5 million. They would be a joint provider of finance. So right now we actually have 20 million. They're lined up for a 12 million pound facility. Now, yeah, things could still go wrong. You know, a meteorite could hit planet Earth and so on. But right now, I can't see anything between us and closing, other than a lot of quite hard work and you know, wrangling and wangling with sets of lawyers here. So we're all going into this. They're all going into the same facility, same loan document. It's a matter of allocation now amongst the various parties.
And they don't mind being
very high level of confidence.
Yeah, and so they don't mind being scaled down, so it's not one or the other, and it's perfectly possible for them to work together.
I believe so, yes. Oh, absolutely. In terms of the working relationship between the large multinational and Aleph, it's very close. And I would imagine that I leave it to the debt arrangers to decide how that comes from. Me, I just see the money.
Okay. Now, in terms of the money, can you just remind us how much you're paying for this particular ticket, the coupon?
We're paying a headline rate of 12% margin over LIBOR, or as it's called now, SONIA, which is of course zero, and likely to remain or nearly zero like that. I would have said for at least 18 months. I would certainly think, my finance director would think about, you know, perhaps introducing some small hedging a little way from now on that, but by and large, it's 12% headline rate. There's a royalty element at the tail end, which is unchanged from the November announcement, it's 8% once the loan is repaid. And there's a very small amount of shares issued over the life of the loan, less than 3% of the total share capital over the entire life of the loan. So a negligible sum each month as an equity kicker.
Okay, I mean, it's obviously seems like quite a high ticket, but given what you're doing, you must feel there's plenty of headroom for you.
Very much so. And I'd say on the pricing, in the context of when we began looking at this last year, you had COVID, an oil price collapse, and a white paper coming out from the government, which was perceived by some to be, you know, not unsupported, but strongly encouraging old companies to look at transition, as we're doing. So a lot of houses that might have financed this project were not open to business. I think that they're more open. You can see that now from the fact that the facility is oversubscribed. But there's an element of development risk here. It's not huge, but there is a sidetrack to be drilled, and there's a lot of execution risk around putting the equipment together. Is it unreasonable? No, I think it's probably about the right pricing. It's quasi-mezzanine debt, and yeah, I don't think we'd do better.
Understood. And how are things going operationally over at Salt Fleetby right now?
Well, they're going very well. We've been slowly hiring new staff. We submitted the full and very lengthy final application to the EA. We've actually been in the EA queue for a long while. We're submitting in the next 24 hours the full and final application to the HSE. They cover mainly the pipeline. So those two regulatory approvals are well underway. The staff have been coming back onto site, many of them who worked there for the last 20 years and being trained up for the new equipment. The key metering skid, is the longest lead item, is well underway in development, and most of the other items we either have a small deposit on, as I've announced in the past, or we've clearly identified and can acquire as soon as we have the money. But most of these suppliers like at least 10% upfront, and then another stage payment of 20% within a short period of time. And you do that on 8 odd million quid.
Yeah.
It blows us out the water. So we have shown this slide in the presentation, which is basically a gap or a pause entirely as a consequence of funding. And I have to say, we started looking for funding in March last year. We had a very good international bank who we got right to the last post with. Had I closed that in June, July, when we wanted to, this timeline would have been very, very considerably truncated. The bulk of our delay has been finance related.
Good. And I understand you've got some quite blue chip suppliers on site. That must be quite an endorsement for you.
Yes, absolutely. I mean, Honeywell in particular is great to work with because they know National Grid so well. So there's an element of trust built up, and National Grid are always a key counterparty here, looking over the fence to some degree and making sure that we're being alongside the HSE, a responsible operator and supplier, but also Caterpillar and Ariel. These are great names. So yeah, great.
Good work. Now, I think that's enough there. I wanted to dig back a little bit deeper, if I may, into geothermal, if that's not too much of a stretching a pun, but perhaps you can explain it. I mean, obviously, you talked briefly about hot rocks and how it works and so on, and it's pretty environmentally friendly. And you've also actually talked a bit about, why you're doing it. There is such a thing in Europe and so on. I don't remember too many being done in the UK, and I know there's been a sort of deal done in Stoke-on-Trent for being able to possibly heat and power the local area. Why don't you tell us about your specific one, whereabouts it is, and what what it will do, assuming it comes to fruition. Is it going to be heat and power, and where? And give us a bit more detail about it, if you would.
It's fundamentally we're looking at right now one particular site, and we would be looking at a 2-well system initially, which is basically a typical injector producer. And the great risk you have as a geothermal driller is making sure that water you're injecting doesn't connect too quickly to your producer, because then it doesn't heat up enough, or so slowly that you get asymmetric pressure build up on either well.
Yeah.
So that's the basics of it. It's not complicated. The great thing is 5 kilometers down, you're getting fantastic heat. And here in the granites of Cornwall and Devon, that's well, it's 200 degrees, which means you can go straight to what's called flash generation. A lot of European projects are actually more at 1,000, 2,000 meters. And there you're having to look at district heating, because to take it to electricity generation requires so much more work. But we'd be able to go straight to electricity generation and feed in initially to the local grid. So it's a relatively simple cash flow stream. But I think the difference between the geothermal for an investor, a shareholder, is the term. You're looking at robust equipment for 15 to 20-year life cycles, producing constantly 24/7 electricity fed into the grid. We'd hope with tariff down the line, and I'll come to that in a minute. And there's also the possibility of grant funding. We all know that that the government introduced its public sector decarbonisation scheme with £1 billion to start with. Not ashamed of looking at it. I don't think the economics need to rely on it, but it makes the risk taking, because we will be looking for all sorts of investors. We won't necessarily, these projects, whilst I think the expense of them in Europe is often inflated, partly because Western Europe doesn't have a lot of drilling skill. It hasn't been big in the drilling business outside of the UK. So the costs tend to be a lot higher. I think the great thing about bringing in Angus is it's a much lower cost driller generally, and approaches everything lower cost. So we're able to make the thing more modest, but I'll be honest with you, I don't think modest enough for the aim. I think the funding sources, we're going to have to be looking at special purpose vehicles, where we're an operator, where we have a carried interest and so forth, rather than just going and knocking on the end. So I don't see this as one where we will be funding this entirely with equity. The reason I mentioned grants is equally pure equity funding, given the risk profile of a deep geothermal well, is going to be challenging without some support, I think, in the long run from government. So better feed-in tariff or some upfront grant. I'm not saying it's impossible. We hope to announce a very, very substantial funding partner at some stage in the next month, whom we're in negotiations with. But there's going to have to be some give and take, I think, with government.
And you know that the well, and you know the people who. I mean, what happened to it before? What has it been untouched for years? And
this is not a well. This is a site for a well. So no one's drilled apart from United Downs to that depth. So
it's interesting because most people, when you speak to them, particularly when they're onshore players, they say it's a good opportunity for a few onshore oil and gas companies to just go back to wells which they'd previously either been unsuccessful for fossil fuels or for anything else. But and it won't cause any environmental problem down there. So
no,
that's good.
None at all. Most oil wells, though, don't reach the critical depth for generation, and they're good for heat, but less so for power.
Good. Well, and just before I finish, what's the time scale on that?
On that one, I think I've mentioned, well, this comes to another point. Actually, Malcolm, thank you for raising that. I think investors, like ourselves, are exhausted by regulatory and planning framework in the UK, which has led to delay after delay after delay. And here I've got these oil fields now lined up like ducks in a row, but shareholders have been tearing out their hair for 2 years waiting for this. My view is you can throw up your hands and get all petulant about it and go off and wander abroad or say, I won't deal in the UK anymore. I don't think that's right. I think the trick is to recognize, actually, it's quite right, you have very strong environmental regulation, for instance, in the UK. What you have to have is a pipeline. What you can't do is be sitting there waiting for 2 years for one project. So I would envisage you'll hear from us of 4 projects of this nature being pushed into the pipeline system, so that we have a rolling program come a year or two hence. But the answer is, the simplest answer to your question is, you don't get a project from concept to drill in anything much less than 18 months in this country, and that's just that. So no illusions there.
Excellent. Now we better touch on your oil assets that you mentioned briefly at the beginning, but you put a note out on Lidsey the other day, and you've got Brockham and Balcombe, which we always talk about. Where are you on those projects at the moment, George?
Well, I think Lidsey is the most exciting thing to have happened actually since apart from Saltfleet in June of last year. I think it's a real restoration of value for this company. We really had written it off as a company, as had our partners and most shareholders. And I'm looking at the work that's been done, and if it's confirmed, as we strongly believe it will be, by a third seismic line, well, that is, many millions of barrels of recoverables in a reservoir which was addressed by at least 5 or 6 other fields back in the 80s and 90s, and very successfully. Some of those wells addressing the Ualite we're knocking out 300, 400, 500 barrels a day quite comfortably. So for me, it's extremely exciting, and we have quite by accident ended up with 80% of that license. So we're in a position here to be able to approach potential partners and say, okay, we need help with paying for the well, and here is X% of the license, and I think that's a very real prospect now. And particularly with Lidsey, the planning conditions there are so much easier than elsewhere. We're not in a very sensitive area, an AONB, or too many SSIs near us. We've got a sewerage plant next door and a landfill site up the road. Not to say it's not a very beautiful area, and we certainly will be very careful with it, but it's less difficult than some, for sure.
Good. And let's talk about the some more difficult.
The more difficult site is Balcombe, and I think we have approached this with such sensitivity and if you were to view it, and I'll take you down one day, please, Malcolm, but it's meant to say, well, screened, it's distanced from any residences. You've got a railway line running just past it, which makes 10 times the noise that we'll ever even dream of making. So I believe it's a very sensitive development. I am equally sympathetic with the strong feelings of locals about any kind of development in such a beautiful area of the country. But I really don't believe it's either going to be seen, heard, or smelt. And it will be a lorry or two more on an already quite busy road. It's true, but that's it. So I'm very grateful to the planning officer for seeing that and the efforts that we made, and I hope the committee will follow with a good decision on Tuesday. So, but it is a well we're confident about as well. So, which is good.
Well, they both sound really exciting. So, particularly Lidsey. When I read that, I couldn't. Probably like you the first time, I couldn't believe it. I thought I'd sort of parked that in the in the remainder bin, but it certainly seems like it's changed things for you big time. We're getting running out of time, George. You've been very kindly gone through in a great deal of detail everything that we have got on the go. The best thing to do, as I always say, is to try and see what you put that all together in terms of what it means for Angus at the moment, and more importantly, in what it always was going to be a busy year, exciting year with a lot happening. Where are you going to be at the end of the year, George? Tell us what your plans.
We aim to be having drilled Balcombe. We aim to have a planning permission up for drilling Lidsey. I don't think we'll get away with doing it this year, as I mentioned. And we hope we'll have our re-injection approval from the EA. We also hope that we'll give a lot more details, secured sites, I hope by the end of the year, for geothermal. And of course, Saltfleet be actually producing and earning cash. So I do see production resuming at Brockham, Saltfleet be production online, Balcombe production online, and Lidsey within an eyesight of production, hopefully funded, they're funded by a third party from some of our 80% of that license. But it is really a diversified revenue stream that I want to present to shareholders. We're not just wedded to oil or even the wheel basin. This is a nicely evolving, highly competent, very low cost company, which will, I hope, develop very considerably and is enthusiastic about the government's net zero commitment. We see it as an opportunity.
Great, that sounds really positive, and it's great to see you again, virtually still, I'm afraid, but not for long, I hope. George, thank you very much for being my guest today. Good. Well, today it's been my CEO interview, and my guest has been George Lucan, the CEO of Angus Energy. I'd like to thank him, and thank you very much for watching, and see you again soon. Bye now.